Hi, everyone. Welcome to an early morning edition on the East Coast, New York time for Trading Bitcoin with your host, Tone Vase. And today I am joined by Tyler Jenks of Lucid Investments once again. And normally we take the weekends off, but there was some interesting price action over in Bitcoin. So decided to go ahead and go live. Let me just set up my, as people wake up. Hopefully this is a good time of day for you all. People in Australia might still be awake. I always like to catch that market. And I'll do my best to keep an eye on the live chat for some questions. But if you really want them to stand out, this is what the super chat tipping option is. That's the only way I never miss questions. Other than that, please tag my name. That helps a lot. And write the words in capital letters question. Otherwise, there's a 95% chance I'm going to miss it. We're going to review our Bitcoin markets as usual. And after that, maybe take a look at traditional markets. Got a couple of things to talk about. Tyler, where do you want to start? You want to talk about the macro a little bit? Do you think people are still in panic mode over the whole ETF thing? And what do you think in general?
Yeah, good morning, everyone, or good evening, depending on where you are. That's a good question, Tone. I've been talking with a bunch of clients the last several days about the macro picture for Bitcoin and the cryptos. And the thing that stands out to me is the deterioration of the altcoins and how quickly they are breaking down. In fact, they're leading Bitcoin down on a relative basis to where Bitcoin is, even though Bitcoin's been falling sharply since that 8,500 high. The altcoins are falling much more steeply and doing a lot more damage to their charts. We still have Bitcoin trying to hold the 6,000 level this morning, which surprises me a little bit. When I went to bed last night, I really thought we were going to wake up and see 53, 54, 5,500.
Yeah, that's what I texted you last night as well. It's like, hey, we need to go live in the morning because that was my exact text to Tyler last night because we're a little tired doing this last night. I literally texted her like, hey, we should really do a show early in the morning because there's a chance we're gonna wake up to a bloodbath. I think that was my exact.
That's exactly what you said, and I agreed with it. I actually woke up about every 2 hours last night to check the price because I was sure that we were going to see this thing spill over, particularly because we'll take a look at some of the altcoins this morning, but anybody following them knows that they've been dropping through their equivalent of a $6,000 bottom. Started it 2 days ago, and all yesterday, almost everyone that I looked at was doing the same thing. So for me, that's the big story on the macro side, is that the bottom has dropped out from almost all other coins, and I fully expect that we're going to see the same thing, but I have not looked at the charts. I will do it live with Tone to see what's going on, particularly with the sequential, but I want to go through some of the ones that I take a look at. And the other thing is you mentioned the ETF question. If this is any reaction to the ETF question, and I doubt if it is, but if it is, then watch out below, because it's very apparent to me that we are going to see the approval of an ETF get continually extended into the future. We will not get a definitive answer in September, in my opinion, and because they don't have to. The more time the SEC can buy, they're going to take it, which tells me it will be the spring of 2019 before we get a definitive answer. So don't hold.
Tyler. And on that note, I can also see people at the SEC sitting there going, if our thinking about this has such an effect on the price of this damn asset, this is not going well for you.
I agree. I agree. That's what I would be saying. I would be saying, look, these people are taking care of the problem themselves. The longer we wait, the more of these things are going out of business, and people are losing confidence. So the best thing for a regulator to do in that environment is just sit back and wait.
Yeah, so I have the chart up of the Bitcoin market cap. Okay, so here's the good news, right? From a technical analysis perspective, we've made a higher high than the last swing high back in April. We've also made a higher low than the prior swing low, right? So this bodes well until like look, I thought we were going back to 90% in like November and stuff, when the price of Bitcoin was skyrocketing going into December and rising faster than the altcoins. And then it kind of all fell apart. Now we're rising again. Now, I've said before that I don't really care about Bitcoin dominance. Wake me up when it's back over 90%. But someone mentioned, hey, does Bitcoin going over 60%? Can it accelerate the crash in the altcoins? And it looks like that's what's happening.
Yeah, it really does. I hadn't looked at that chart for a while, but I am very surprised that we're getting higher highs in total capitalization. So that's the only explanation. It used to be you could make the explanation that there were so many new ICOs coming out and money was flowing into them that the cap rate would stay fairly strong even in a bear market. But now the opposite is happening, where more and more of them are disappearing. Therefore, for that number to keep climbing, it's got to be going into Bitcoin. When you look at the market cap of Bitcoin, you don't really see that. But what's happening is it's a relative movement of how many traders are getting out of altcoins and putting that into Bitcoin. Otherwise, the Bitcoin market cap would be falling even faster than it is.
Yeah, I also like to remind people when they do go to CoinMarketCap, I wish CoinMarketCap kept older data or even daily data, but they do have weekly historical data. So I strongly advise people to go to tools and go to historical snapshots. I used to do this every now and then. And right now we are all the way down here on the, the first week of August, or we're on the second week of August of 2018. Just go back a year, right? Go to August 6th of last year and take a look at what the top 10 looked like. It actually looks somewhat similar. Ethereum Classic is in there, NAM is in there, right? But and look at BitConnect at number 14, right? So you gotta, it's really an interesting exercise to just go through every now and then historically, and you will find out why at the end of the day, it will only be Bitcoin. Because if you go back, August, the first week of August 2016, and there it is, you have Steam, for God's sakes, at number 4, and Made Safe at number 9, right? It's like so much of this stuff is complete and utter nonsense that all of the top 10 is pretty much nonsense. You still have Ethereum and Ripple up there, right? But if you go back far enough, it gets really, really interesting. I mean, here is 2015. In 2015, we were at the very bottom of the bear market back in August. And look, you have Dash at number 4, Dogecoin at number 5, Bank X at number 7. And for God's sakes, BitShares is in there at number 10. I think now BitShares is like number 200, right? You have to realize that all of this is complete and utter nonsense. I guess I only have 2 more years to go. I might as well just go through it for people real quick. Here's the week of August 10th of 2014. NXT, which got hacked to shreds, was number 4. Namecoin is still in there. Counterparty was at number 12. That's another one. BitShares, BitShares is at number 11, right? That's the scam by Dan Larimer before BitShares is another BitShares, or there was a rebranding. Who the hell knows? I mean, these are your top 10 altcoins, and that's what they're always going to be. And finally, here's August 04, and Litecoin at number 2, Namecoin number 3, Peercoin, Feathercoin, Novacoin. It really gets hilarious, and a lot of these coins are still with us. And I remember some of these were hyped up as much as your current altcoins top 10 are today, and they were gonna, take over the world. I gotta find the one where Aurora Coin was number 2, about to challenge Bitcoin for number 1. That was an interesting week in the world of crypto of history. Oh, lost your mic, Tyler, there. All right, guys, let's jump to the Bitcoin charts. Yep, you're back. You want to say something, Tyler, before we go to the Bitcoin charts?
I was just going to say that that is very interesting. I've never done that myself. I'm going to start doing that. In fact, I'd like to graph each one of those time periods. I've got to figure out a way of doing that. That's great stuff.
Yeah, it's a neat little feature that they did, just a weekly snapshot of all the alts. All right, guys, let's take a look at the charts. Okay, so here's our monthly chart. The monthly chart happens to be currently at the current price of Bitcoin, because this chart updates daily. At the end of about 12 hours ago, it updated, but it seems to be at the same price we are today. And like the monthly chart bottomed out very nicely, I would say. It had a big rebound into the declining trend line back in 2014 days. It was a pretty strong move. We came off the low of 345 and ran that up to the high of 678, right? So we went from 345 to 678. That's actually doubling, right? That's a doubling of the price. We've also had that. We've had a doubling of the price when we went from 6,000 to 12,000, and then we almost had a doubling of the price when we went from 5,700, recently up to 8,400. We went up 60% or something like that. Now we are back to the lows, and back in 2014. And again, I am comparing Bitcoin to Bitcoin only because I can't find a better asset to compare it to. Like I've said before, I would love to compare the Bitcoin bear markets to other bear markets, like gold bear market, the NASDAQ bear market, the financials, the Japanese bear market. But the timelines are so different, right? Like the further back you go, and I find this very interesting, Tyler, by the way, like the further back you go comparing bear markets, it's like with better technology, there is a faster movement of information. So with every bear market for the last century, the ones closer to today complete faster. Have you noticed that? Oh, you are muted again. Sorry. Yep, you're good. You're really good. Nope.
I have.
Yeah.
I've noticed, but I've really noticed it in the last 4 months because we've got this hyperwave research group. We've got about 30 people that are searching for hyperwaves around the world, not only historically, but currently. And we keep running into the fact that the phase 1 lines today are much shorter than they had been historically. And also, we're moving between phase 2, 3, and 4 much more quickly today than I've ever seen looking at historical bear markets and bull markets that were in hyperwaves. So I'm looking at it a little bit different than you are, Tone, because you're thinking in terms of bear markets and comparing this Bitcoin bear market with trying to find other markets that look similar. And the best one you found is another Bitcoin bear market, whereas what I'm doing is I'm looking at both bull and bear markets together that form this thing called a hyperwave. And I'm finding the same thing that you just concluded, that maybe it's technology, maybe it's globalization with more people able to trade across borders, because a lot of these new exchanges allow you to buy foreign securities, either ADRs or even in some cases ETFs from other countries. So I think there's a much bigger pool of people using electronic systems to chart or simply to follow the news when they're buying and selling things. And then you've got CNBC and Bloomberg and all kinds of outlets that every day are screaming about various headlines. So I think you're right. I think you're right that we've got to change our thinking in terms of the historical properties of either bear or bull markets, and also of hyperwaves.
Yeah, and it's funny, as we started talking about it, somebody in our live chat raised the question, do bull markets complete faster as well? And it sounds like you are seeing that they are. Now, here's the interesting part, right? Like like people of the followers of this YouTube channel know that I'm a big fan of Martin Armstrong. Like, not necessarily his trading method, but his understanding of economics, finance, and cycles. It was because of Martin Armstrong I learned the importance of time in trading. Prior to Martin Armstrong's work, even though I was already an options trader and time is a factor in being a good options trader, I never really understood time. And thanks to him, I did. And that's what made me pay attention to the sequential system even more, because it's a time-based indicator. Now, and Martin Armstrong talked about this on his blog and at his conferences, that when he was asked the question, do things do bear and bull markets move faster today than in the past? And his answer was no. And his reasoning for saying no is that human, like human interaction with the market, the human's ability to process the information and react has not changed in the last 100 years. So his view is that things are still are not speeding up in terms of it. But I disagree on two levels. One, a lot of the trading is not done by humans anymore. It's done by bots, and they react significantly faster now than they did, in the 90s, and in the 70s they didn't even exist. And the other thing is the transfer of information, right? Like when something happened in Japan in the 80s, it was like the average person at home in the US didn't really have access to that information relatively quickly. And today they would know it within seconds.
I would agree. I agree completely with that. There's another thing having to do with cycles, which are time-based, and there's been an awful lot of work done on it. People don't talk about them today nearly as much as they used to, but the important cycles have been getting shorter and shorter, not longer and longer. The first real cycle anyone used to talk about was the Kondratiev wave. Nikolai.
Oh, that takes an unreasonably long period of time.
It does, but it's also very important historically, but less important today, because shorter term cycles have taken over. That was a 52-year cycle, basically. And he talked about it sort of the way Armstrong talks about it, tying together not only military action, but overall global economic action, including depressions. And some other people came along, a cycle called the Kitchen cycle, Kitchen, another economist, that was a shorter term 12 to 14 year cycle. And then we've got the presidential cycle that's 4 years long that has gone a little bit out of favor because the Federal Reserve has changed. It used to be the Treasury under whatever administration, and the Federal Reserve sort of worked hand in hand, taking us into a 4-year presidential cycle. There was also a 4-year economic cycle where we go up for 2.5 years and down for 1.5 years. And we had 22 of those since the Federal Reserve was established. But since the Federal Reserve has changed the methodology where they're not only playing around with short-term overnight rates, but now they're actually printing money by acquiring bonds, and those bonds have been expanding from treasuries to mortgages and other things, that artificially lowers the interest rates and kills that 4-year cycle. So now we've got a 10-year bull market going on with the US stock market. And I'm a firm believer that that is because of the support given by short-term rates that then get converted into asset buying. But in any case, it's all very, very interesting. Your simple observation that it seems as if some of these cycles or these bull bear markets are happening faster, that's true. But at the same time, we're getting this lengthening period. We went from 2000 to 2009 without being able to go up. We went up and down and up and down. And now we've got a 10-year, basically the longest in history of the stock market going up without any significant correction for 10 full years. Significant correction means over 15%. Certainly no bear markets, but very few, even 5% corrections since 2009, which I think is one reason you might be as bullish as you are, and I am too, on the stock market right now.
Yeah, so we'll probably cover the stock market at the end, but I mean, our view, whether Bitcoin goes, the bull market or the bear market lasts longer or shorter, we're gonna resolve this within the next 9 months. We will know if the bear market of 2018 is going to be shorter than the bear market of 2014, because it's kind of debatable when the bear market of 2014 ended. And by the way, Armstrong uses an 8.15 or something like that year cycle. And I was watching the end of that cycle, and the end of that cycle was August 11th of 2015. And that's when I was trying to time the bottom, and it came in actually like right here at the very end in 2015. It came in. I'm sorry. The 8 point. Yeah, that's right. It was right here. The 8.15 year cycle. No, that came in right around SegWit in 2017. But I was looking for another point in 2015, also based on Armstrong's cycle, and those were my 2 points. And but in any case, the bottom in the monthly chart almost gave you a 9. I mean, we made it down to an 8, and then we had a price flip. So it was just like almost got that 9. And unfortunately, the monthly has just reset to a red 1. And I am looking for potentially 8 more months of downside. Now, the low can show up in candle number 5, 6, 7, 8, or 9. So I would love to see that low come in. I mean, ideally, you want the low on the 9, but if it shows up earlier, that's okay. Then we bottom earlier according to price. So we will know, by end of year, whether the 2018 bear market drags longer than the bear market of 2014. I consider, like, even though the low came in January, we didn't really start going up until October.
Right. Yeah, it was a very slow rounding bottom. And it's difficult to see a capitulation there, except on that 5 candle. That possibly was, it was the bottom, but that might have been some sort of a signal even before your 13 on the 3 green candle.
Yeah, let's jump into the stop and reverse points and the Bollinger Band.
Yeah.
So this is the weekly chart. We are so close to to breaking the stop and reverse point. I think it just has to close below the middle of that circle
Right.
In order to break the stop and reverse point. So if we close below 6,000 tomorrow night, we will break the stop and reverse point, and now they will once again be resistance. Now, here's what I found interesting that I just noticed in that in the 2014 bear market, we spiked we broke the bottom Bollinger Band back in April, but didn't close below it. We did close below it back in September. We then closed below it again in January on that capitulation spike. And then there was a second capitulation spike. Now that I'm using BitMax, like those, I remember those weeks. Like on BitMax, for example, the August 2015 capitulation went down further than the January one. On Bitstamp, they were completely opposite of each other. So you see that in the two charts, like the one we looked at before. So as you can see in the 2014 bear market, we spiked under the Bollinger Band on 4 occasions, closing below it on 2 occasions. Actually, there was one more there. So far in our current bear market, we have not even touched the bottom Bollinger Band once. And that's a big difference. And I think we will have to spike and potentially close below this Bollinger Band before it's all over.
It's funny. I don't know what John Bollinger says about this, but my view of the top and the bottom Bollinger Bands to get a really very clear signal is not just breaking them or penetrating them, but getting a full candle above or below them. If you take a look at the top at 20,000.
Yep, I see it, a full candle above the Bollinger Band.
And it's a very rare thing, but it's a great signal when it occurs. It does not mean
it almost happened back in June as well.
Yeah.
And that was followed by a significant 40% correction.
Exactly. So for me to be really on board, now I use that basic rule also on the middle band, that I don't really care if you are coming from the bottom up to the middle band and you close above it. That doesn't tell me anything. If I get a full candle above the middle band after coming from the bottom, that to me is significant. So I was watching this very carefully over the last 3 weeks, where we got a green candle closing above it, but clearly it was not a full candle. And then we had a second candle which was red, but the first half of that candle was above the middle band. And so the same thing to me on the bottom is I really want to see a full candle below, or on the top a full candle above. And that's almost an undeniable signal.
Yeah. Yeah. Hey, the stop and reversal points on a daily chart, I mean, they've done very well. I mean, if you mechanically traded stop and reverse points in the last 2 months, you've done very well.
Yeah, I love it as a Wells Wilder. It doesn't seem like it's much. The calculation is fairly simple. It's like the RSI. He is the creator of both of those, along with the directional movement and a bunch of others that people don't use anymore. But these two, and particularly the stop and reverse, is something, if you're in the market, you just don't want to ignore it. I don't necessarily use it if I'm out of the market looking for a place to go in. It makes me sit up and take notice. But I use other things for actually putting money to work. But as a way of knowing that you're in some danger, it's awfully good.
Yeah. All right, let's move on to my standard charts. Yeah, we're already going back to the lows here. Like I was and we crossed. I mean, this was a green 4 for a long time, but now at these lows, we are on a price flip. So next week we're gonna get our red 2 below a red 1. Again, it creates a bit of a rough trading environment for the shorts right here. Now, obviously, and we've talked about it, the def cross was a significant and a high probability short trade. You know, jumping in on the breakdown of this triangle after the price has just moved, you know, $2,500 on 8,500. I mean, we're talking 2.5 on 8. That's over 20%. We're talking almost 20, over 25%, like 27% drop in 2 weeks is not the time to jump on a short trade. It's just not. Like it needs a dead cat bounce. It needs another one. And I was really looking forward to a bounce back to 7,000. I mean, it looks cleaner on a daily chart for it to bounce back to 7 before going down to 5,000. But I kind of have another private bet with someone that we're going to hit 5,000 before the end of this month. Then, like I did with Dark Poke on 6,000. So I have a private bet, not for $10,000, unfortunately, but I have a private bet with someone that we are going to fall below 5K this month by September 1st. And I kind of don't like to lose, so I do want to win that bet. And it's not a big bet, guys. It's actually an interesting bet. And it's just a principle of it. So I don't mind it hitting my $5,000 target earlier, but I really wanted to bounce back to 7 before going back down to 5. But the weekly chart right now, assuming this is where the week is going to close, and with 36 hours to go, it'll probably close under 6K. And remember, if you get a new candle close that is lower than any other close, this will be the lowest weekly close this entire year. And that is just straight out bearish. Like if there's any technical trader out there that's going to tell me that a new weekly close being at its yearly low is bullish, I don't think they deserve. I don't think they deserve to speak in public.
Yeah, this is not a good looking chart. You've got the death cross sitting above it. And as Tone mentioned, the price moved right up into that death cross perfectly. And you see the reaction in the last 2 weeks from that death cross. Also, we've just cut down through the shorter term moving average dramatically. We've taken out that red line that Tone has had drawn for a long time. I sent some tweets out yesterday that were half comical saying we've got some turbulence ahead, not predicting anything, but this is the time to strap in your seatbelts. I agree with Tone that this is a difficult place to get out of a long position. And it's a much more difficult place to get into a short position. But folks, this is as bad as a chart gets in a bear market when you have been hoping for a bottom. That doesn't mean that this is deterministic or definitive, that everything is about to happen, but you would be wise to bet that way. And
Yeah.
that's
Oh,
the
sorry,
way.
go ahead, finish up.
Yeah.
Yeah, we are totally in line right here with the weekly chart of early September of 2014. The difference is at that time we were approaching a weekly 9, and now we're only starting our weekly 9 count.
I think Leah's in now.
Oh yeah, Leah's here. Awesome.
Tyler. Hey,
Hi,
Tone.
Leah. Good morning.
Morning.
You were the one to see that I was in. Look at you. You're so
Morning.
tech advanced.
I am. I'm a real techie.
You're a real techie, that's for sure. All right, gentlemen, keep going. I apologize for my tardiness.
Not at all. We just got started. We're looking at a bunch of charts and coming to some bad conclusions. We're looking at the weekly chart, and it is broken down. I've got a problem right now, Tone and Leah, because my phase 2 line is now up approaching 5,400. We've watched it climb from 4,000 up to 5,400, 80 some dollars a week.
Hey, Tyler.
Yeah.
Let me do something here. Where do you draw? What did you use for your hyperwave? What exchange?
I'm using Bitstamp.
Oh, you know what? You know what I'm gonna do? I'm gonna use the because it's a weekly anyway. I'm gonna use the index. I'm gonna use the average.
Okay, good.
So let me create a hyperwave chart. So go ahead and talk while I create it. Or actually, no, I might need your points. So I'm gonna make a copy. I'm gonna say Bitcoin hyperwave. This way I have your numbers. And next time we do shows together, we can do that. So what's the point? I already have 1,000 tabs. What's one more?
Okay, I would be using.
So I'm gonna drop everything from this, and it will only be hyperwave. So not even sequential. Maybe I can leave sequential. I'm gonna do this. I'm gonna definitely drop all of our trend lines. I'm gonna clean up the sequential is what I'm gonna do. I'm gonna drop the set up trend lines. I don't need that. I don't need that. I don't need that. I don't need intersection. I'm just gonna leave the things with the arrows. This way it's totally cleaned up and they're not in my way. And I don't need the RSI here. I don't need the MACD here. And now I definitely don't need the Fibonacci's, though they're not really in the way. I can leave them. And oh, actually, no, I can't do that because I need the chart. I will do, I'll do this. Okay, so now let's see here. So
I would use March 19th.
Yeah, I'm gonna drop the Fibonacci's. I don't need them. Okay, so I have a couple of trend lines here that I can play around with. So I'm gonna use a blue one for phase 1. Let me start a new one. Yep. So what are we gonna use? March
19th of 2017. And connect that with July 16th of 2017.
Okay, so these are my trend lines. So March. Oh, where the hell did it go? Here we go. Oh, too much down. Yeah, so it's one of the issues here. Okay, so March. Hold on. March 19, 2017. Oh, no, wait. We're talking about phase one line.
Oh, phase one. I would just put it at the $1,000 mark.
Oh, at the $1,000 mark. Okay. So until it breaks. So let me do this, and I'll literally use 1,000 and 1,000. Okay, and it looks like I have it breaking. Yeah, 1,000 is actually a good one to use. I really like it. It looks like I have it breaking on February 6th, the week of February 6th.
Yeah.
Close enough, right?
Yeah, exactly.
Okay, excellent. So the price has to stay below that one. And here is my phase two line. It's going to be green. Come on. Perfect. I'm going to start that. Well, this gets a little bit tricky. I'm going to do it maybe like yay. So where do you start your phase two? This is the weekly chart, by the way.
March 19th.
March 19th is your phase two. Okay, yep, I have it March 20th. And it doesn't go out very long here. It looks like it ends in July, on July 17th. Oh, I'm not on linear, my bad. There we go. Yeah, so that's pretty much phase two, and that kind of makes sense. And then we have phase three.
Hey, Tyler, you're on mute.
Two line.
Color.
There you go.
Extend the two line all the way.
Oh, yeah, I'll do that. And then here's phase three, which looks like phase three is ending somewhere around November, and then we go exponential.
Yeah, right through that low, the doji low there, or the yeah.
Yeah, so it actually ends in September here.
Well, it actually keeps on going. You need to extend that one too, because remember that the phase two and phase three are extended into infinity, and that's where we're running into problems. We were hoping that phase three was going to hold. We'll take a look at it once you draw it.
Right. I'll extend them in a minute here.
Right.
And finally, we have that giant phase four. Now, this is a very short phase five. You're saying that didn't go down very much, right?
Right. Well, I've got it going down to the 5,900. Actually the second week. You could draw it that way, but I believe that
it only went down for 2 weeks.
Yeah, exactly.
Got it. And right, so we can extend these all the way out. Right, so that's your phase three line.
Yeah, that was the killer. I really wanted that one to hold.
Yeah, we all did. And this is phase two. Okay, so if I extend your phase two, let me get this right here. You can't close below it. So I have it here. And this week, phase two is at 5,200.
That's very interesting. Yeah, I've got up around 5380 off of Bitstamp, but when you've got that long a period of time, a small angular difference will do that. So I like your number. I feel better about your number. What was that? Almost 52, 51?
50, 52, 50, it's like 51.75.
Okay, great. So here's my problem. My problem is that we now have three things happening in a very small area. One is tones 49.75. One is the Fibonacci line, and the third is my phase 2 line. And they're all occurring in a bunched area that starts with my phase 2 line being above the other ones. The reason that's a problem for me is I'm such a strong believer in that phase 2 line providing strong support that even though we will probably break it here in the next couple of weeks, maybe even shorter, it won't close that week below that phase line. It'll penetrate it, then come back and close on Sunday above it. And the reason that's a problem for me is it will probably have also met Tone's bottom at 49.75, and it will probably also bounce off the Fibonacci line. And therefore, those three things together will make it look like a very strong bottom. And I don't believe it is a very strong bottom, so I'm not sure what I'm going to do when that happens.
Yeah, and I just have one more line to draw. Wait, I'm trying to bring to front. I want it in front of the candle. It still goes, yeah, there it is now. It's in front of the candle. And I have one more line to draw, which is this one. And this way, like, I'll always have your hyperwave lines.
Great.
Here, and they're not going to move. So here is our phase 7. Now, the price has to stay below phase 7, or it doesn't have to.
It does, but I would put that phase 7 all the way over to the next peak, right?
Yeah, you see, Tyler, this is where I might have to debate you on your own hyperwave. In that phase 7 looks a lot cleaner from here.
I agree. I agree.
And that means that phase 5 is more like you can't close above, right?
Right.
So phase 5 is more like this-ish. Can't close above. So it's got to go through that candle. It's got to go this way. And then this.
And then your phase
7
phase 6 would be from that doji bottom up to your phase 7.
Right. And then phase 6 is more like this.
Yeah, I can't argue with you. I like that better. That feels better.
Right. Like if I put it here, then that's weird. So the only other option I have is moving this over to there. Yeah, this is perfect because now I'm saying we didn't close above. We go right into the doji candle from this very top of that candle. And there you go. So that would be, and I forgot my phase 4 line. This would be something like yay. And then that becomes phase 7. And the only line we're still missing is a phase 4 line, which we can put here. Can't close below. So there we go. Can't close below. So it's like that. So we can open below, but we can't close below. So that's a close below. So I have to move that over to here. Perfect. There it is. There's your hyperwave. You're muted, Tyler. Yep. Yep, you're good. You're good now.
You're good, Ty.
The 6 is very short. Very often the 6 gets people back in, and that's why I liked it off the initial bottom, because so many people wanted to jump back in off of that spike down to 5,900. But I like you.
No, I agree, but like I I wouldn't say in this case, right? Like here's my reasoning against it. I don't believe that a lot of people got back in on this very quick drop. Like myself included, I got caught in the bull trap. I only became bullish at the very end and very quickly realized it's a bull trap.
Yeah.
I think this other low at 6,000 is the one that people, including myself, actually thought that this is going to be a prolonged move back to the upside. But at least you and I were both able to catch this when it couldn't break.
Right.
Yeah. So it could go both ways. It's just that like the 7 line looks so much cleaner from here because otherwise you have to draw it like that.
I agree. I like that a lot. I think you did a great job on it. I would agree with that. And it does something else that's very important in a phase 7 that I've talked about before, which is phase 7 loves to take its time getting to where it's going to go. And it gets more and more people frustrated because they keep trying to buy these lows, but the phase 7 keeps them trapped. And if you extend that phase 7 line into the future, and let's just assume we drop down now and we do take out the phase 2 line, then the price can go down to sideways like it did in 2014 for a very long period of time.
Yeah. Yeah, so it's still possible for both of us to be right in that we spike down to below 5K, but close above phase 2 line.
Exactly. And that's what I'm hoping for.
This month.
This month.
Because next month it becomes a lot harder to do.
That's right. Almost impossible because the lines are going to start diverging, meaning my phase 2 keeps moving up. Your 49.75 stays where it is, and the Fibonacci stays where it is. If you maybe just throw a quick Fibonacci, then you can take it off, because I think that Fibonacci 78, I haven't looked at it on this index chart.
Yeah, it's at 48. It's at
48. So it's right there. So between 48 and 52, that's only 400 points, less than 10%. We've got 3.
Yeah, because I have the Fibonacci on here on a monthly chart.
Yeah.
And it's at 48.
Okay, great.
And okay. I start the Fibonacci, but I do start it earlier than you. You probably started at 1,000. I started at like 175.
Oh yeah, you're starting a little earlier, but that's
right. So if I move it up to 1,000, it's not going to make that much of a difference. If I move it up to 1,000 even, it's at 54.25.
54.25. Okay.
Yeah.
Okay.
Yeah. 54.25 if I move it up to 1,000.
All right. So that would put it though above my phase 2 line. And anyway, what my point
above it for like the next 2 weeks or so.
Yeah. What my point is, for anyone listening, is I think it's very important at critical turning points or possible critical turning points in any trending market to begin to look ahead and just come up with the various scenarios using various technical tools. And that's what we're doing right now. Hyperwave is one tool. Sequential is one tool. Vertical or horizontal trend lines like the one Tone has drawn at 49.75 or Fibonacci lines are additional tools. But when you put them all together, you begin to see that maybe there are some important areas coming up in the near-term future, which, if you're out of the market, could be places to step in. And if you're in the market, might give you places where a bounce will take place that you can then begin to step out of as you move higher off those levels. And That's why I say I've got a problem coming up here shortly. And we're only 800 points away now, $800 away from the phase 2 line. And we're only about 1,000 points away from Tone's line. So we just moved 2,000 points in 2 weeks. Don't be surprised that we're going to be talking very soon about these very critical lines.
Yeah, so here's the daily chart, and I already see a question about the long versus short interest, and we are going to mention that. I know this is going on a little bit longer than expected, but here's the daily chart. I mean, I was really hoping for a 1 to 4 candle correction, but when it doesn't happen, how do you trade it? Well, the daily chart gave you a brand new daily lower close. So by yesterday, when the price started to fall, you have to recognize that this market is even weaker than expected. And there's no way, like, you got to get out of that, counter trend rally. You have to know that you are doing a counter bullish trade, and you have to be out of that trade with a loss or whatever. It depends on when you got in. And now you have a red 2 below a red 1 after a 9. The red 3 hasn't gone below a red 2 yet, but it doesn't matter. At this point, you need to recognize, or even yesterday, a trader should have recognized that you are dealing with a countdown phase after the 9. You had a 1 candle correction. I always say 1 to 4 candle correction. Sometimes it's 4, sometimes it's 1. In this case, it was just 1. And now you are playing the countdown phase. Is it always going to work out? No. But at this point, I am waiting for a brand new 9 and a 13. And they might come around 5,000. We will see. But this looks very, very bad. If I zoom this backwards, as far as I'm concerned, yesterday's close has only been... We've only had 2 lower closes on a daily chart this year than yesterday. That is very bad. And our lowest close this year, which was a horrible bear trap, was on 28th of June, a horrible bear trap. And I mean, you should have been out of it early. That blue line's there for a reason. And it might happen again because we have already moved so much. This is why I wanted the market to reset, because in our next slide, well, this is the 12-hour chart. The 12-hour chart is on a 9 doji, by the way. So we could be looking at another small bounce for the next 2 days. Like, the daily and the 12-hour are not in sync at all. The 12-hour is telling you to get out of your short trade. Your daily is telling you to get into your short trade. So this is not the most ideal time to put a trade on when your 2 very close time frames to each other are telling you opposite things, okay? Not the best time to put on a high probability trade. What I want to show is this is the daily chart. I'm going to do a line chart. Maybe I could, oops, that's the Fibonacci's. I'm going to drop everything, and I want to kind of separate. All right, so the blue is the price of Bitcoin. The red are your Bitfinex shorts. I'm going to do this. How far back do I want to go? Let's go for the entire year. Let's go with the bear market here. So the blue is the price of Bitcoin. Here. The red is the shorts on Bitfinex, and the green are the longs on Bitfinex. So notice how this is the second highest amount of shorts this entire year based on daily numbers. The prior top was significantly higher in shorts, but also notice that at the time, there was also slightly more leverage longs. Like, look at this chart. Like, leverage shorts were above leverage longs, but not for too much. Like, they weren't that leveraged. Right now, leverage shorts are higher than leverage longs, which is rare. Most of the time, people are bullish. People are rarely more leverage long than leverage short. And you can see it from this chart. You can see on very few occasions, the red line goes above the green line. And what happens next? And last time this happened, the ultimate time it happened, we had that giant bounce in April with the short squeeze. Over here, we also had it happen when the shorts got above the longs, and we also had a bull market run to 8,500. Let me extend this a little bit. So right now, we are dealing with the same scenario. So the long versus short leverage is telling me that we are due for a bounce to the upside.
Tyler, thoughts? And I have a question related to shorts when you finish, Tyler.
That's very interesting. It's interesting because of what the daily sequential is saying. And it's also interesting because we were set up for a 1 to 4 day bounce, and we got the minimal, which tells me, but I want to, excuse me, I want to ask Tone about that. Is it indicative at all when you have a 1 to 4 day bounce call, if you get a 4 day as opposed to a 1 day? Does the 1 day indicate more weakness in your mind than if you got the full 4 days?
No, it's not in this case, right? This is where the price falls into play here. The 1 to 4 day correction, I believe, is more the reason why like the 9s and the 13s are so precise, but the 1 to 4 day bounce is not precise at all, because look at the variance between a 1 and a 4 day bounce. And Tom DeMark never talks about the 1 to 4 day bounce. This came specific from traders using his indicator. There is nothing in the book about the 1 to 4 day bounce. Tom DeMark never talks about it, right? So what I think, the reason why traders see it as a 1 to 4 day bounce is because it's purely price based. If it reaches its ultimate dead cat bounce in price elements in 1 day, then you're done. But sometimes it takes 4 days, right? So it's not the time element that matters in a 1 to 4 day bounce. It's more of a price, because over here, if you remember, Tyler, back in this area here, when we hit a 9 off of this giant cup and handle, and we broke all the moving averages back in March of this year, and we were both optimistic, I was willing to give the 1 to 4 day bounce to the downside anywhere as long as we didn't take out the prior low. And the 3rd day took out the prior low. And it was over, right? The 4th day was a doji candle, but it already moved so much in price that I no longer saw it as a 4 day dip, because the dip went so far. Okay, so and the other thing that bothers me is this: we hit a 9, we had a nice 2 day correction. It was beautiful, it was perfect, and then we started the countdown phase, and then couldn't hold it, and we had another short squeeze, right? So I really think the correction is 1 to 4 days is more price-based than a time-based, and this is all the mustard that it had. So it's neither, so the time element doesn't tell me if it's more of a reversal or more of of a continuation. It's where the price is after that correction ends. Oh,
You're
no.
on mute, Ty. Oh, we can hear it.
Yep, now good.
Okay.
Nope,
And,
lost you again.
and then we lost him.
Okay.
You're good.
You're back, you're back.
Okay. How about the fact that we broke below the green dotted line?
That is a huge negative. Breaking the green dotted line gives you a much higher probability of going into the countdown phase.
Okay, so that coupled with just a 1 day on the 1 to 4 day bounce, how would you put those two things together with what you just looked at in terms of the net leveraged buyers and sellers in terms of calling for a bounce?
It's completely it's contradictory.
Yeah.
It's contradictory. Your daily chart is screaming to short this thing as of yesterday on a red 2 going below a red 1 after a 9. But your 12-hour chart is telling you that there is a short-term bounce coming, and your weekly chart is just overextended. Considering how far we've fallen in 2 weeks, we're just overextended on the weekly chart back to the level of support of the triangle, needing one more bounce into the top of the triangle. So your daily is screaming short, but your weekly and 12-hour, the two charts around it are telling you to be careful. I can grab the 3-day chart. We haven't looked at that in ages. And the 3-day chart is telling you should have been short as of the 5th of August, and don't even sweat it, stay short.
And Tyler, what are your thoughts net?
Putting it all together, I don't think we're going to be able to bounce very far. I think we are, the tip of the canoe has just gone past the waterfall, and the weight hasn't shifted yet, but in a couple of more moments or hours or days, it's going to shift, and we're going to go over the edge.
Yeah, and the thing is, like, shorts have been burned twice before.
Hey, one of your guys' mic is reverbing, but yes, keep going.
It's probably Tyler's, I'm going to assume.
You're good.
Shorts have been burned twice before, once back in April and then once back in late June. And is third time a charm for the shorts, or are they going to get burned one more time because they're so short, and then they're going to just be completely wiped out for the fourth time's a charm?
Yeah, good question. I don't know. I would not be in this market on the long side. I would not be buying hoping for a bounce.
Like, the best thing to be right now is in cash, like exactly what you're doing.
Yeah, I agree. I agree. This is a very critical place, everyone. I'm glad we're having this detailed discussion this morning, just to give everyone ideas to think about themselves, because if you're in and you've been looking for a place to get out, you're hoping for a bounce.
Like basically at this point, considering if you're in cash right now, it's safer to wait for the shorts, the leverage shorts, to get wiped out, and then buy on the. It's a more profitable trade to wait for the short squeeze at this point. And if that short squeeze comes at 5,200, 5,300. Or see if you can time the daily 9.
Right.
Like at this point, if you weren't short and you missed the short trade between 8,500 and 6,000, it may be a little too late to short. Stay in cash. Try to catch another dead cat bounce like we just had from 6,000 to 8,500, which I would not have caught because it didn't line up on the daily as nicely as the February bounce lined up from 6,000 all the way to 12,000. So at this point, my advice to people is stay in cash and don't chase the short trade right now. You should have done it from the depth cross. If you missed the short trade, stay away. And if you tried to catch the dead cat bounce, 2 days ago off of 61, 6,200, you got to get out of that long trade because it's too dangerous right now. But your short trade right now is also dangerous because of, just the ducks are not lined up in a row.
Yeah, I think that's very smart. That's one of the reasons I am not a big fan of trading cryptos or trading Bitcoin. Basically, my approach has been this thing's a hyperwave, so we'll ride it up to the top, and when we get a signal, we'll get out and we'll just wait. And so far, almost 8 months have gone by, and we've been sitting in cash. I will continue to sit in cash until we test that phase 2 line down 800 points lower than we are right now. But I'm not going to be buying, although I have told some consulting clients this is a logical place to put a little bit of money to work because of Tone's 49.75, because of the 4,800 Fibonacci, and because the 5,200 phase 2 are going to be very difficult just to blow through. And therefore, you can expect a bounce. Maybe you go all the way down to 4,400, 4,500 interweek, but then you get the springboard back up over the Fibonacci, the springboard back over the 49.75, and the springboard back over the 5,200 or 5,300 by that time. And you've got yourself the beginning of a very good bounce. But I would do that with a small portion of your trading and certainly your investing money, 10 to maybe 20% of X down below that 49.75, 4,800 Fibonacci line would be a great entry, with the idea that it might not come back. And if it doesn't come back and it simply cuts through all of those, then to me, you're headed down to the 1,000 level or Tone's 1,300 level. And you've got plenty of time to either exit that position you just put on or just wait to add additional funds at much lower levels.
I was going to say, let's just finish up here with Bitcoin. Someone asked me about a gap at 4 a.m. UTC time. On Bitfinex, I don't see a gap. Here's the 12-hour chart, the 1 hour chart. And we close down here and we open immediately at the following candle. So I'm not sure what you're looking at. Maybe it's whatever data source you're using. TradingView doesn't have that gap. We can take a look at a handful of altcoins if you like. Other than that, we can also mention the Mayer multiple if you like, or Leah had some questions for us.
I do have some questions for you. You brought up the Mayer multiple really quickly. I know people often do ask both you guys about the Mayer multiple. Did you want to speak about that for a second?
Sure. Let me just glance at Ethereum real quick. I know Ugly Old Gold writes about it a lot.
You're defying the rules of the live chat that I put in place today.
What?
I put in rules in the live chat today.
Oh, excellent.
Yeah, you're defying it right now.
Well, I am?
Yeah.
Altcoins?
I took Rodolfo's, and it's for the new Mastodon instance he created, which is no scams, no shitcoins, no impersonations, no begging, and no illegal content. And Tyler, you'll like this edition from one of the viewers. And he said, and add to it, no idiotic predictions of Moon soon.
Yeah, so here's the dollar price of Ethereum, and it looks really bad, like really bad. When you have one of these giant ascending triangles, you're not supposed to go back below that triangle. And this is a monster cup and handle with dollar charts. I mean, I love how the high came in on a 9-13 combo. And like, I can't believe Ethereum went to $1,500. That's just like insane. We're now back to 300 and we are at the setup trend line. You kicked off a brand new count. I drew this, I must have drawn this red arrow a while back. This red line was my absolute Mendoza line. I'm not surprised that Ethereum has cratered after crossing this line. I think Ethereum is finally going to go to zero, and it's about damn time. I can't wait. It will be like someone asked me the other day, what am I happy about? Well, everything in Bitcoin is doing amazingly well under the hood. What makes me happy these days is things like Ethereum and Btrash and Zcash going to zero. That's pretty much the only thing that will make me happy right now in the crypto space. And the sooner they get there, the better. Here's the Ethereum versus Bitcoin, and that doesn't look too great either. That one is also on a short. Again, same thing, right? Like, it's just weaker. We've crossed the prior low. We really need to get below this, that swing low. Yeah, so Ethereum right now is at 0.05, and it needs to go significantly lower. The Mendoza line on that is actually this line. Like, if Ethereum goes below 0.0325-ish, it's probably all over. That would be really bad. That's its ultimate up and down line. So that's rough for Ethereum. I think Litecoin is pretty much done as well. Somebody asked to look at Zcash. I haven't looked at Zcash in ages. Zcash.
Tyler, any contrary thoughts to what Tone's bringing up and talking about?
No, we talked about it sort of in the intro that I think on a macro basis, the most important thing going on here is the deterioration of the altcoins at a faster rate than Bitcoin. We looked while you were still sleeping at the market cap weightings, and it was really fascinating. Yeah,
it all looks bad.
Yeah,
all the old coins look bad.
Does, which is, in my mind, the best story for Bitcoin. Not Bitcoin prices, but Bitcoin itself, because we're clearing out all of those, the underbrush, all of the barnacles, 1 by 1, 10 by 10, 100 by 100 are disappearing. And that means that when Bitcoin price...
We lost your time. Just on the perfect moment. You're back. Not back yet.
Good.
Oh, okay. We can hear you.
Wow, that's funny. Anyway, to me, this is, I've been hoping for this. To me, this is the fundamental case that we would not be able to bottom in Bitcoin, and the end of the bear market could not come unless we could clear out all of this ICO and altcoin stuff, and it's happening quickly. And that is ultimately perfect for Bitcoin maximalists. But I think it's also perfect for anyone that's got a very broad understanding of what this space is all about. So I'm also very happy.
Tone, can I do one follow-up to, oh, maybe it's me. Follow-up to Tyler before you go to Trace Mayor Multiple?
Mm-hmm.
So Ty, that actually sounded a little bit optimistic. So someone was asking, what are your probabilities of another potential optimistic scenario, which is that this turns into a funky hyperwave.
I have not changed on that. It's still 1 in 4. I think there's a 3 out of 4 chance that we're going to break below my phase 2 line and keep on going down. But that is dependent on the length of time it takes. If we can bounce 3 or 4 or 5 times over the next 2 or 3 or 4 months off of the phase 2 line, then to me that strengthens the possibility that that line is going to hold, not simply from hyperwave, but from the point of view that it's giving time for all these other coins to disappear. And it's giving time for the SEC to make very definitive statements about the difference between Bitcoin and all of these others. They've made some preliminary statements, but we need a lot more. And it will buy us time to strengthen the Lightning Network and buy us time to strengthen some of the underlying projects that we need to have occur for Bitcoin. So that's my take. I'm not ready to conclude that we will not have a funky hyperwave where phase 2 holds, but I don't give it even a 50-50 probability at this point.
Thanks, Ty. Tone, when you're ready on Mayor Multiple. Otherwise, I have some, maybe 2 interesting questions.
Sure. I really wish someone would update this chart. I've been seeing it a lot lately again. Unfortunately, the last point on this chart is in like mid or like late 2014. So like 3 years, even more, almost 4 years are now missing from this chart. And in general, it's been pretty spot on because we started, we started 2017. We ended 2017 at approximately $10,000. I mean, that's where Bitcoin was in the beginning of 2018. It was approximately 10 grand. And, I have a message. I don't think we're going to end 2018 at, $15,000. I think we're going to end significantly below the line. But I think during the, the hype of the 2020 halving, I think we're going to catch up. So I think we spent a lot of time above this line because remember, we went all the way to 20,000 in 2017. So we went significantly above this line the way we did back at the end of 2013. And it's time for us to go below this line, just like we spent most of 2015 below this line. We spent most of 2015 below $1,000. And 2015 was supposed to end at like 3,000. And we ended 2015 at like, 500 or something, right? So we spent a significant time below this line all throughout 2015. We spent a significant time above this line all throughout 2017 or towards the end of 2017. So I'm not expecting us to start at $14,000 in 2019, but do I expect us to start 2020 in the vicinity of 60,000? Maybe not, but do I expect us to end 2020 in the vicinity of 60,000? That is very, very possible.
Tyler?
Yeah, that's a fascinating chart because if you look at 2010 and 2011 and 2012, how far below the parabola the price was for a 2-year period of time. I think that's what we're about to enter into. You can go well above the line for a year or so, but then you pay for it when you go back below that line. And I think that's what we're doing. We are going below that line and we will stay there throughout 2018 into 2019. And then to me, hyperwave will be wherever it is. It will have ended either below 1,000 or started up in a new hyperwave sometime in 2019 off of a funky hyperwave. And then 60,000, 80,000, 100,000 is certainly in the cards as we get closer and closer to that halving.
Yeah, and also people have to keep in mind with 3 additional years of data, this logarithmic regression could have a slightly different curve, but based on my I can picture where the price would be along the current regression line, and I honestly don't think it would change all that much.
Very interesting. Do you want to take a close look? I haven't had time to study Mayer's work.
I haven't really looked at it, and it looks like it's percentage above and below the 200-day moving average, and I don't think it's ever gone below the 200-day moving average, right? I think the lowest it's ever gone was like 50%. I'm actually surprised. Is he using weekly pricing data? Is it weekly 200 week or 200 day? I think it feels like 200 week, because for some reason, if it was 200 day moving average, I have a feeling we would have gone below it in 2015. So I have this feeling that it's the 200 week moving average. We've never, because we've gone below the 50-week moving average. It's possible we've never actually gone below the 200-week moving average. And that would make sense on a close week-end basis. So I have to assume it's that. And we are sitting at only, 1x. Well, actually, this is the confusing part, right? Is 0 the 200-day moving average, or is 1 the 200? And I don't even know if it's weekly. Oh, it's day. Sorry. So it's 1 is the baseline. So we did go below the 200-day moving average in 2014 and 2015, because I'm assuming 1x is the baseline, not 0. But I need to check on that.
Yeah. What's interesting are the 3 big peaks on that chart. Interesting to me because the third one is the smallest, and the first one was the largest. The second one was next largest. So that's very interesting. But it's also interesting how it's similar to Willy Woo's work in terms of the 3 peaks that he shows using his methodology on Bitcoin. What I'm wondering about is it helpful in any way in terms of understanding bottoms? Does it tell us that we're close to a bottom at 1 or not? And I don't have an answer for that other than the 2014, 2015 period that not only dropped below that, but stay below it for a fairly long period of time.
Yeah, but Tyler, here is the thing, right? Is it possible that this chart, the Mayer multiple is at its low? That is very possible. That doesn't mean that the price of Bitcoin is at its low.
Right.
The price of Bitcoin can still go lower as long as it drags its ass getting there. This could start to rise.
Yeah, you're right. Yeah, I want to work with this for a while. I think it's very interesting.
I think we're gonna spike down. I don't think this chart has seen a spike down yet. And you know how these things are. The more people start looking at this thing, the more inaccurate it's going to be. A lot of this stuff is only as accurate as the amount of people looking at it.
Yeah, that's very true.
Question on that. Is TA able to pick up manipulation in the market?
No, manipulation in the market is ignored with TA, but I'll let Tyler answer.
Tyler.
I wouldn't use the word ignore. I would use the word absorbed. Any manipulation that takes place is already in the price by definition. If Tone and I started manipulating the market right now, if we had the power to do that, it would be showing up in the price instantly. So obviously, if we did that today, we did something, putting in an enormous order because we were working with Middle Eastern clients that wanted to move the market. And we did that. It shows up in price instantly. And then tomorrow and next week and next month, it's already in the chart. It's absorbed into the chart, just like a news item. A news item that comes out will have a very temporary reaction in the market, but from that day forward, it's in the chart. The news item is absorbed into it. So it doesn't affect in any way the overall movement in the future of the price, where technical analysis particularly predictive technical analysis. There's three types of technical analysis. There's technical analysis that is measuring momentum. That's looking backwards and bringing the past into today to measure the momentum of what the past has just shown you. There's a number of things that show you the present situation. Sequential shows you the present situation and the probabilities of what's about to happen. But it is not predictive like a 1 to 4 day bounce. Doesn't tell you, is it 1, or is it 2, is it 3, or is it 4? Or is there going to be 9 coming up? You have to let the an indicator like sequential play out day by day. Elliott wave is telling you what the past is telling you about today, but it is not predictive because you have 36 different variations of corrections that today's Elliott wave can go into. So each type of technical analysis, each tool gives you either a look back, a look at the current situation, or a look at the future. The thing about hyperwave is it's deterministic. Once you know you're in a hyperwave, you not only know that you're going up 8 to 40 times the value of phase 1, but you also know you're going all the way back down. So it's predictive about what is going to happen with this formation. So that's a long answer to your question, Leah, but I think it's important to understand that each technical tool brings something different to the party.
Thank you, Ty.
Hey, Tyler, when did the Hunt brothers try to manipulate the silver price?
They started, believe it or not, back in 1974 and 75, and then all the way up until the peak in 1979 and 1980. They were doing it for years. And after they ran out of money, they brought in the Middle Easterners to aid them. And when they ran out of money, the board of governors of the COMEX began changing the rules and started moving the margin money up to a...
Oh, lost your audio.
If any this microphone problem, I'd like to know it. So then the rules were changed in 79 and 80 where nobody could go short silver and could not take any long positions in silver. They could only put in sell orders, and that's what killed the Hunt brothers. But they had been doing it for almost 6 years.
Oh, you're gonna love this. That's the 1980 high in silver.
Yeah, isn't that beautiful? A 9? Wow.
A 9 on the weekly.
Wow, that's incredible. And that is with the most massive manipulation of all times in any market.
Yeah, there it is. So again, manipulation or not, technical analysis can help you. And now the monthly topped out a few months earlier, but the weekly kept going. And I'm really curious what the daily will look like now. This is the week of January 21. So if I go to the daily, and I go to the week of, so this happened on 1980, January 21st. That was the week of the high. How about that?
Unbelievable.
That's the daily chart. There's your daily silver. I mean, it didn't trade like it does today. It was
Well, you know what? You know why those are blank points there?
it's just like end of day price or something.
No, they were moving limit up. And when you move limit up, it opens and closes on the opening. And nobody can trade it the rest of the day.
So there you go, right? Like you had a daily 9 inside a weekly 9 at a top in silver on January 21st, 1980, and we did not break that top again until 2011.
Wow, remarkable.
All right, so there you go. Now, sure, you could have also said, well, there was a top in silver on this candle on January 8th daily, but your weekly still had some room. And the moment you go above that, this would have been a green 2 above a green 1, and you're back in silver. And then boom, you top out on a 9.
Wow, fabulous.
And a decent, dead cat bounce off a 9 as well afterwards. And this is the daily chart, by the way. This is the daily chart. So there's your TA in one of the most manipulated markets of all time during this time period.
Well, gentlemen, do you want a last question or do you want to end this? How are you guys feeling? I know you guys could chart.
I need to. I think we should be ending it. I wanted to, run to the farmer's market. It's the only day of the week I have to buy some, good eggs and a bunch of steak. Though I won't be home for the next 2 weeks. So we should probably end this. I'll just grab one or two more questions. I just want to remind people of the Chicago Bitcoin Carnivory Dinner with myself and Jimmy Song. This link should be in the video description. The public, this is a way for people to pre-register, but the public one is going to come out. I believe Jimmy is going to publish it tomorrow or Monday. And I am off to Vegas on Monday, I think, to speak at Chain Exchange and then Block Show in Vegas. From there, I'm off to Chicago to speak at Voice of Blockchain. Then I am off to Europe. I will be in Paris for about 4 or 5 days to speak at a private event. And but then the cruise. Also, speaking of the cruise, I need to send out a tweet. They are giving away 10 free cabins. So check out Coinsbank Twitter. I should probably just retweet their thing. I wonder if I'm eligible to win one of those free cabins, and then I'll give it away to my followers or whoever I like, basically, to join us on the cruise.
Or
and
flip it. You could flip it.
Flip it, sell it. The Honey Badger conference. Oh, there could be some more events in between. This is going to be amazing. Lots of great speakers. Blockchain Day in the Netherlands, Prague. There might be other conferences in between. And of course, don't forget Vortex's workshop. I have like too many announcements these days. It's crazy. And if you guys like my work and want to support my work, please check out the affiliates page. We love giving away free content, but also if you are willing to support without it costing you, I'm not asking for donations. I should probably even remove my Bitcoin donation address. It's just an OPSEC disaster waiting to happen. But if you like to support our work and all the free content, please check out the affiliate links and the Amazon affiliate links as well. I just signed up for it finally because I'm so lazy. And if you guys want to support our work, you don't have to buy these products. As I learned yesterday, even if you click on any of these links and buy anything else from Amazon, that helps out because Amazon does provide a little bit of a kickback. It's not much, but hey, if you want to support this podcast, anytime you buy from Amazon, just click on any of these links and then do your shopping, because the discounts, the kickbacks apply to anything you buy from there. I think this is a great way for people to support content creators without, directly paying them. I think that's really the best way. I know some people don't like this kind of monetization, but I think it really is the fairest form that doesn't put a burden on people that are absorbing free content.
Okay. I do have some high level ones that I maybe I'll throw one in. Also, Tyler and I have a really big announcement.
All right. Let me stop screen share and go for it. You need me to pull anything up for you?
No, Tyler POTUS 2020. All right. I bet Tyler's mic is muted. Otherwise, he's being coy. Okay. Actually, I'm going to throw this one really quickly at Tyler, and then I have one for you, and let's end it. Ty, what's your best contrary indicator that signals a bullish reversal? Not TA.
Oh, I got one after Tyler.
And I think maybe your mic is muted.
No, I haven't
good.
I haven't said anything. I'm thinking about that. Not TA. What
Not
is
TA.
the
Best contrary indicator that signals a bullish reversal?
Well, to me, it is the number of, it's a sentiment indicator. It's the number of people that are bullish or bearish at extremes. So a reversal off of the top occurs where everyone is bullish and talking about it and tweeting about it. And a reversal off of a bottom always comes when nobody is interested in that bottom. And that's a difficult thing to measure, but there are some pretty good measurements of it, but that's actually technical analysis. You can try to guess it, and very often it's very obvious just by looking at the number of trolls that come out at various places. When Tone and Van Zen and myself were about the only people on YouTube or on Twitter that were talking about a prolonged bear market all the way down. Every time we got to another bottom, everyone was bullish. That's the best indicator for me that prices are going lower. And the same thing is true going up. When everyone is talking about it, then that's time it's going to reverse.
John?
Yeah, so I agree with all that. On the way up, it was tricky. I mean, we went from 7,500 to 20,000 in like 3 weeks, right? So you can be so right and so off on the price. So I agree with all that. I'd also like to add, I want to see some major significant events at the end of a bear market. Those events can go from very significant lawsuits, like, for example, a class action lawsuit against Peter Schiff over gold, right? Could help me signal the end of the gold bear market. Like in the Bitcoin space, like Tim Draper, that I remember buying like 400,000 Bitcoin at one point and sitting on a giant position, or Mike Novogratz, they're rage quitting and, saying Bitcoin is too manipulated and it's not going to work. And we're selling our, 500,000 Bitcoin stake for our clients, right? So something like that can signal the end of a bear market. And there were a couple of these in the 2015 end of the bear market. If there are any notable suicides due to the falling of the price of Bitcoin, please tag me in those tweets. As insensitive as that sounds, that will help me identify the end of the bear market.
That was a very sad ending, but Tyler, a response to that was a really sad ending.
Yes.
Tyler responds to what Tone was just saying.
Thanks for making our weekend, Tone.
Yes.
No, but the point is very well taken. When you look back at the Great Depression, unfortunately, the bottom of the stock market and the bottom of the economic activity in 1933, the closing of the banks, the confiscation of gold, the number of suicides hit a peak. And that, unfortunately, that's the way people are. You hold on to beliefs as long as you can, and then you give up. And the importance of that story is, don't hold on to beliefs. Don't fight the trend. Don't believe that your view of the world is correct, because not only does that cause tremendous financial problems for you, it will also shake you to your very core in terms of who you are and what you believe in. So I think that's a very interesting point.
Right. Now, also keep in mind, Dora's waking up. There he is. Also, you might my comment on the suicide side of things. That's an extreme case. Like, that's an extreme bear market. Like, I'm not expecting that in this bear market. I don't think it's going to get that bad. But if it does, that is an indication of the end of a prolonged, really bad bear market. Also, like, for example, in the end of the gold bear market, like the central bank of London sold all their gold, right? Like, again, that's an indication. I don't remember people committing suicide at the end of the gold bear market. So it doesn't have to end that way, but they certainly did at the end of the Great Depression. So it really depends on the type of bear market you're dealing with, but these are the kinds of non-technical signs you are looking for. And they differ based on your asset class, and length of bear market, and the speed of the drop in prices.
So to finish with, so Tyler and I recently worked on a piece that we published. So Ty, as a capstone on that, do you want to explain how that relates to finishing off phase 7?
Yeah, we've talked in general about that. To me, this is the macro. I always like to understand what's behind technical movements, the long-term technical trends on a fundamental basis. I don't start there. I start with the technical. But Bitcoin has been very clear to me right from the beginning. I started mining Bitcoin before Mt. Gox. I got caught in Mt. Gox. We went through a period of time where the price stopped going up. I bought some at 580. I held on to it. I watched it go up to 1,000. I watched it go back down to 580, back down to 200, back up to 580. I said, this is stupid. And I just got out. Then for 3 or 4 years after that, 2 or 3 years after that, it wasn't even on my radar screen until my son called me up and said, Dad, take a look at Bitcoin. I think it's in a hyperwave. And that was in April of 2017. So I started thinking, what is it about this that is causing this persistent growth? And now it is signaling that it's beginning a hyperwave. And what was clear to me is what I had thought back in 2012, which is this thing really makes sense on a macroeconomic basis as a way for the central banks of the world to solve their problems. But they are not going to embrace it. It's going to be a long period of time, which is going to mean adoption has got to occur worldwide. And that's what a hyperwave started to give us. But along with the upswing in 2017 in the phase 2, 3, and 4 of a hyperwave, we got 2,000 clowns and jesters jumping into the pool setting off explosions and fireworks, and the chaos was enough to kill the hyperwave, meaning to put it in from an up cycle to a long down cycle. So I've been saying ever since that peak that the fundamentals that have to shift are legion. And it's all of the exchanges, and it's all of the wallets, and it's all of the security, and it's all of the double attacks, and it's all of the mining, and it's all of the hash rates, and it's all of the phony numbers. Einstein could not figure out what the heck was going on with this ecosystem, and still can't today. But a bear market will force the issue. Now, all of a sudden, you've got the regulators falling into line. You've got the deterioration of the alts, and that is clearing the underbrush. And that's what the article that Leah wrote is all about. It's that there's a fundamental problem. It's not a technical problem. It's not because tone is forcing the market down. It's not because of my talking of hyperwave is forcing the market down. If Tone wasn't here, if I wasn't here, if Van Zen wasn't here, this would all still be happening. So forget that as an excuse. The problem is fundamental with the ecosystem, and that is getting cleaned out very, very quickly, and it will allow the developers time to do what they need to do. So that's my answer to the story.
All right, I think we lost Leah there for a minute, but I think this is a good time to close out. We've gone almost 2 hours. I'm gonna try and still get to my farmer's market, and then I got a barbecue to go to. Maybe it'll clear up. It was a giant rainstorm here all morning in New York. But Tyler, thank you so much for joining. Leah, are you still here? Maybe. All right. Well, you can say goodbye.
Oh, yeah. Leah's saying she's still here. So I'm saying goodbye. And thank you very much, Tone. That was a very interesting 2 hours.
Yeah. No, thanks for joining me this morning. Leah, thank you for coming in, helping us out. And hey, good luck trading this weekend. I'm not sure if I'm going to do any more podcasting this weekend. And Monday, I'm off to Vegas. So we'll see how that goes. Maybe we'll do an early Bitcoin breathe on Sunday. But hey, if crazy things happen in the market, sometimes sleep is overrated. So we will maybe see you again this weekend, and see you all on the next one. Good luck trading, guys.
Great. Thank you.